What up, investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, we're going to be looking at a smorgasbord of things. We're going to be talking about about 7 stocks. Again, towards the end of the video that we're looking at, two of them are very speculative and tied to the potential moves to come. So they're going to be putting in that very off chance of being on the very skeptical side, on the sense of speculative. It's not skeptical, speculative in the sense of if we can get a pop or not. But with the overall market kind of in a very choppy mode, we'll be looking at that. We're going to be looking at the workhorse stuff and what Cathie Wood and Ark Investment are saying about it, and why they just added to their position just in the last couple of days on the news of the USP contract going to Oshkosh Defense rather than Workhorse, which is again driving to be the number one provider of EV supplied trucks here in the United States, delivery postal trucks kind of systems. Then we're going to be talking about the stocks. We're talking the potential of the speculative ones, and then kind of discussing again the market depth, looking at the QQQ, aka the NASDAQ, on seeing where we could see some continuous support and so forth. So again, if you haven't already, please don't forget to hit the like and subscribe down below, and let's go ahead and get into the show. So first and foremost, let's talk about Ark Invest. So more particular, Ark Q. So that's again one of the Cathie funds. Again, they have been pretty much, I would say, sliced this week. It was not a good week for Ark, especially with very high growth stocks really getting a beat down this week in the sense of rising yields. Again, which makes it less lucrative for people to put money in the market, aka in equities. And at the same time, Workhorse, which a lot of people have been talking about over the last coming months about bidding about this contract. They're hoping and saying that Workhorse is going to be getting the USPS contract. So again, if you're not familiar with the United States, that's our United States Postal Service. They're going from old gen to new gen. And sadly, Workhorse did not get the bid. There's like a huge billion-dollar contract over 10 years, anywhere from 80 to 150,000 vehicles they're going to be purchasing. Sadly, again, as of right now, Workhorse did not get the bid. But the reason why Ark bought into it more is because the highlighting here is that Workhorse news is that the Democrat in the House of Representatives is attempting to overrule the contract awarded to Oshkosh. Ark finds it odd that the USPS is not committing fully to electric platform. According to our research, they will dominate the truck production and sales in the next 10 years. Okay, so this is, again, Cathie Wood's time horizon is very much longer dated. Yes, they are in and out. It's a very actively traded fund, but this is suggesting that Ark is looking further down the road for Workhorse. And if again, it's the government. You're trying to overrule a government, a large entity of the USPS to try to overrule to another contract. Godspeed to that. That's going to be a fight that I do not want to go for. So I want to definitely have to be very careful on that one, and really being basically it's going to be like a large no in the sense of to be a lot of pain potentially and chop. So if they can get that overruled, maybe Workhorse definitely going to run on that. But what probability number are we going to put into if it gets overruled? Because again, the reason why is they're stating is because Oshkosh is going to be making that new generational truck, but they're not going to be doing all of it in EVs or batteries kind of cars. They are still going to be making the old gas engine, which is kind of makes somewhat sense because you can't just flip the switch like that, no pun intended, on that market. So looking here on ARKQ, which is the ETF that is in Workhorse, you see the daily update. Again, I will post this link in the comment section or the description down below, so definitely take a look on that. You can kind of see here the yellow bar is the price of the stock, and the purple is basically the shares that they have on the stuff, and then they have your cost average information coming in here. So basically on the dip. They were buying into this. Uh, there's just a little bit of little bit amount of shares just accumulating here, and of course a large chunk on that down day initially on the 23rd, and they actually bought more the following day. You can see here the amount of shares is at 3.245 million, and the cost average is around $17.30. And the price of the stock is $15. So their cost average is higher than the count of the stock. So that's, I think, knowing again, they're not throwing they're not throwing billions of dollars, not throwing 100% of their account into this. This is a very small, like less than 2 or 3% of RQ. So it's actually less than that. I think it's like 1 point something, 1.75. Let's look here. It is, the weight is 1.42. So again, this is a very small part of their portfolio. They are making a pretty large bet saying that, yeah, hey, we don't believe that this is going to stand. And I think that Workhorse has plenty of potential up ahead. But in the next 10 years, not saying like in 10 years from now, boom, it's going to go higher. They're just saying Workhorse has the products, it has a beautiful scenery and a road ahead that it could get awarded other contracts, and just being the leadership of their research, that Ark has hinted that they are the market leader in this particular industry. So basically, food for thought on that one, 100%. Let's kind of just jump over to the Workhorse stock. And of course, I just showed you one of the stocks we're going to be looking at, which is GoGo. Very speculative play though. Same with Workhorse, honestly, on mine. I think this is very a bearish looking chart. So by bearish, I mean, doesn't mean it's going to come further down. It can, but this candle from basically $33 all the way down to 13, not a good look. Meaning that I don't like to buy stocks that have really got cut in half. I'm more of a trend trader, and this trend has been very choppy, as you can see here on the daily chart, just kind of meandering around 30, coming back down to 20, 30, 20, and then the little bit of pumped up here on the speculative of Biden's EV and awarding more contracts for companies that are more what's it called? Not consumer, but more environmentally friendly, which EVs are slightly more than ICE cars or combustional engine cars. And the same fact of that, coming down to these very extreme levels, we can do a very quick fib here from the swing high to the low here. It's kind of broken past all the moving averages here. So that is taken on a lot of water here. It's broken past the previous low that we saw here around 1509. It did close below that a couple days, but it is currently not being able to get above the 38.2 percentile move, which is around $17.22. Again, the damage has been done. Can it rebound? It can probably rebound to 22.14 in the short term, but it's going to need some kind of catalyst to kind of keep it moving, because a lot of people, there's a large bucket. Again, I don't know the percentage. Let's just say 65% of people wanted this, was betting on Workhorse, maybe even 75% were betting on that Workhorse is going to get this contract and it's going to be going to 50 to 100 and to the moon or whatever they're going to say. It didn't happen right now. Of course, we were talking about the people were trying to flip it. That is good. Godspeed to them. With that, Workhorse, I believe, very damaged here. I don't really want to touch it with a 10-foot pole. It also does have earnings coming out on the 1st, so I don't want to be anywhere near this. I don't want to be on this. This earnings call is going to be terrible if you're part of the company. I'm just like, yeah, we done messed up. Sadly, we didn't get the bid, but maybe they can kind of tune it and kind of potentially spin it like, hey, it's okay. There's plenty of fish in the sea. Let's just go to the next one, even though this was probably the biggest fish in the sea as of right now in the foreseeable future. But anyways, Godspeed to them. I hope them the very best, and definitely going to be watching on seeing how this one potentially moves out. Because again, do they have weekly options? They do. So the expected move for next week is about $4. So keep a mind on that. So if it does go lower, we could potentially test that $12 range. I'm actually going to put an alert there. So that's going to be the break of $4 higher, or it's potentially trying to get back up to that 20-ish dollar price target around $19 or $20 basically, 2017. So with that one, let's go ahead and jump into the overall market. So let's kind of just look at the QQQ. So QQQs, basically they have had a lot of issues here, talking about the market just really choppy here and taking a lot of growth stocks out, taking people out to the woodshed, and just being really much just the bear dancing over your corpse right now with a lot of people. If you were very heavy into growth stocks that don't have hopes and dreams of creating earnings, by that I mean earlier stage companies, aka the SPACs, aka a lot of the EV plays, that market has got a little frothy here. We're seeing it definitely pull back, and those very strong. And then at the same time, with the higher yields coming in, we're seeing that pullback coming in the S&P 500 as well. So that being said, we're coming in for some potential support around the 89 EMA. So the 89 EMA falls in around 310 to 309. We haven't tagged it yet, but if we can continuously seeing some selling going through, we potentially could see those numbers drag a little bit lower, because with a pretty large pullback like this, it takes a little bit of time to flush out all the weak hands and just kind of do its cleansing of the market, which again is a good thing at times. Again, if you remember that correction we had way back up here around the beginning of September here, we basically dropped from 304 all the way down to 260 in a very short period of time. So we dropped, how many days was that? About 2 weeks, and we dropped about 15%. So that was a very aggressive move down. So currently speaking, we're only, if we do stay on trend here, come on, think of some. Moving this part here, we're only on 11 days, and we're only down about a little over 8%. So that 89 EMA would potentially put us to around that 9-ish to 10%. And if we see that continuous selling into next week, because what do we have next week? The non-farm payroll, which could be a catalyst for more of the bonds people to kind of go crazy, in the sense of, if we are seeing a lot more growth, we have the stimulus check coming out potentially, if that's being passed around in the government. Then we have a lot less jobless claims. That could be also incentivizing higher growth in the economy, meaning we need higher rates. So why are we keeping interest rates so low if we're growing the economy? You can't have that. It's like a tit for tat kind of scenario. You can't have both, because you're going to be creating inflation. But then you have Jerome Powell, the Fed chair, saying, "Hey, everything is fine. Our job's not over. We do see growth, but we're still going to try to keep everything as QE and keeping it down as and creating the spark in the economy that we need to see." We'll definitely see potentially some more news coming out towards the reopening stocks. So the epicenic stocks have really had a very large rebound in the last coming days. Once we've seen this yield curve kind of switch, because people kind of rotated out of tech into the other names between airlines, cruise lines, and so forth. In that note, so let's go ahead and just jump into some stocks. We're going to be talking about, I did talk about this on the live stream, so if you did stay tuned for the live stream, you're going to be looking at a couple of the stocks that we did talk about. For the first one that we talk about is INMD. So this is an Israeli device company for basically plastic surgery. And they have a new, not newish, but they have a process where it makes it less painful, faster recovery, and so forth. I think this is part of my reopening play. I've been in this stock for quite some time. Seeing this particular pattern here in the short term, having a little bit of issues trying to break above $71. If we can get that breakout above $71, we could easily see it run to $80 to $86 if that the catalyst or momentum is behind it. And always stay hydrated too. And if you haven't already, please hit the like and subscribe. So it's been holding the 21 EMA very well. I'm kind of keeping this. If you're just starting to build a position, keep it on a short leash. It can easily come back down to 63 to even $60 to potentially test that base here to kind of maybe shake out some weak hands. But I normally like this pattern here, kind of building up on a strong Fibonacci number here from the previous swing high to low. So we can get some consolidation here, maybe get some really tight contraction, and maybe get that blow off top to see those prices go higher. And the next one is basically two stocks. So the two stocks we're going to be talking about is DE and CAT. So the old John Deere, really large on the reopening plays, infrastructure plays, with the new president expending a lot on investing in the United States in the sense of the infrastructure and so forth. Deere is pretty much off to the races here. A little bit not my cup of tea to buy up these highs here, but you see my alert here around 320. I'm not currently in the stock here, but looking for the $21 to $34, 21 to 34 EMAs to potentially show some support to the downside if we do get a pullback. 335 is going to be your first line of the sand, but this thing want to continue to go, that $400 price target is definitely in sight. And then also the same note, CAT, kind of that same one, reopening a little bit more choppy than we see in John Deere. We're seeing it kind of peter out here, potentially coming into some short-term support around 212. It is trying to break that 230 range. If we do get a healthy pullback to potentially the 2134 EMA, which would be around the $200 range, we can easily see this consolidate here, and maybe get that run higher into those higher targets around 230 to 245. Another one that I've been in as well is Logitech. Logitech has been a wonderful stay-at-home, work-from-home kind of play here. It is kind of trend changing here, so it's on my targets. If it breaks below the 104 to 103 range, I have to reconsider my overall position. Because if it starts hitting to the 89 EMA, which is below 100, I have to be very careful with this one. We have seen it break to the 89 EMA before, but that was due to vaccine news and just, again, a little bit more of a panic selling and just kind of more just a shoot first, ask questions later kind of scenario. I really like this one. I still do. I think it has the potential to still be a very strong company, even though more and more people potentially are going to be going and leaving their home offices, even though the whole gaming segment, Logitech makes some of the greatest products in the world for gaming. So I'm still somewhat of a bull on that one, but being considering of that. All right, forewarning again, this is just all for educational purposes. Again, these are my stocks, these are my opinions, everything is shared here on the show. So jumping into the speculative plays for potentially could be setting up here. We're going to be talking about GoGo. So that is kind of maybe somewhat of a reopening play here, being the Wi-Fi component inside the aircraft. With that, been very choppy here, very high short interest rates, short interest floats, not rates. Seeing potentially a pullback to that 1115 to 1116, the 89 EMA range. If this does not hold, we could easily see this flush lower to around below 10 to around 880 to $9.88. Be heads up and mindful that we do have earnings coming out the 3/11, so that's March 11th. Or the 11th of March for everyone out there on earnings. Again, if you're not familiar with earnings for my book is a coin flip. So yes, be very careful on that one. And at the same time, very much the folks on Wall Street bets kind of like this one as well. With this, again, this has seen a lot of kind of some choppy markets. It has pulled back pretty significantly. There is a little bit of a damage done here on the stock here. But if we do hold that 1116 for the next couple days or even weeks, we could easily see this potentially run up into earnings to that 14 plus range to maybe even test 17. On the weekly chart, again, this has made it a pretty astonishing move. So it is, again, very much on the speculative plays list. So this is not something you just can put all the chips in here and you just go full YOLO. Yes, I said it. Don't go full YOLO on this kind of play here. by betting your whole account. And the second one is SI. Of course, SI is very much tied to the Bitcoin's craziness. You can see this is pretty much leveraged right into the whole Bitcoin play. At the same note, this is pulled back not as substantially as other stocks within the crypto space. It's coming to the 34 EMA, so around that 117 to 115 range, which is again that 34 EMA. If we do get some kind of consolidation here, aka base building here, that could be a nice little small entry point. But if we see this, the 5 and 8 cross through the 21 and get some more selling, especially looking at the price of Bitcoin itself, we can easily see SI really be a follower of the overall Bitcoin market and easily see it come back down to basically $93 to $80 if we do see that selling coming through. In that same note, this is one of the stronger pullbacks that it has seen in recent months. So very mindful. There's a lot of overhead pressure, and that can create this little catalyst lower, because we're looking here on this particular chart here. And if we add the study, where was it? Here we go. Boop. There we go. That we're going to see the amount of price accumulation is, a lot of it is basically around that 90-ish to $80 range. So if we do get a sell-off, that's going to be the stronger level support. Initially talking that $100 range is something that we could see for a potential slowdown. So without further ado, thank you so much for coming by, watching the video. We'll be trying to do a daily video around that 6 to 8 p.m. time frame, so stay tuned for that. We'll be doing a live stream on Sunday, and always have a grand old time around that. Thank you so much from the bottom of my heart. Check out those affiliate links down below if you're interested on setting up a fantastic trading account. I use Tastyworks. There's an affiliate link down there. If you open an account of $2,000 or more, you have a chance or an opportunity to select 100 shares or 10 options, and that basically will create a starting plan for you for investing. And at the same time, Audible. Love me some Audible. Always listening to Audible books when I'm walking around the house, going on my walks now since the weather's a little bit better. I love me some Audible. But on that further note, guys, have a blessed and wonderful day, and I'll catch you guys on the flip side. Peace.